do not expect this soft or softish landing that central banks are trying to maneuver?
No, I think it'll be very hard to avoid a recession, particularly in the U.S. The economy is running too hot in the U.S. The labor market is still running above where it should be. Wage pressures are still high. The Fed is going to have to cool down the economy one way or the other. If this banking issue doesn't cool the economy, the Fed will have to cool the economy.
So then how do you invest in this environment when there's so much uncertainty? Do you go hunting for valuations and bargains, given, of course, the uncertainty right now?
Well, one approach you can take is regional. The U.S. appears to us the most problematic part of the investment universe in equities. You can go to emerging markets, you can go to Asia, where you don't have these banking sector problems, where the inflation problem isn't nearly as serious as in the U.S.
Dan, when you take a look at emerging markets, and I guess if you're still looking at China as the anchor, are there compelling stories there, even though we've seen the recovery rally, at least in its first leg, kind of stall for China?
China is still cheap, even after the big move we've had since it reopened. It's trading at an unusually large discount to big global market peers. There is still a better macroeconomic story in China than anywhere else as far as major markets is concerned. There's really, I think, still quite a significant amount of room for China to outperform big global peers.
When you take a look at banking stocks, and a lot of people obviously made that trade over the past week with some variable results. But if you take a look at Asia, particularly places like Australia, where the fundamental situation is quite different for lenders, do you see value in buying any kind of the sympathetic dips that we've seen so far?
I think in general, Asian banks look interesting right now. They're very cheap. They don't have, in general, the problems that U.S. and say European banks have with interest rate risk in their bond books. They don't have the same liquidity risks. Now, Australia wouldn't be a place that we would be favoring within the Asia-Pacific region. I think the Chinese banks, Indonesian banks, Philippine banks, Indian banks would be more interesting places to go to. But in general, I think Asian banks are a place that people should be looking at right now.